Hello guys, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video on Nike Inc., ticker symbol NKE. I want to go through this video by just saying that I think that Nike Inc. is a very interesting prospect because it looks very undervalued from the financials. But does that mean that it's actually a buy? I think it's very complicated because Nike operates in the fashion industry, and as we all know, consumer tastes can change very quickly in the fashion industry. I also think that Nike doesn't have the full amount of dominance that companies like Coca-Cola do or Disney do in terms of their brand. I think that they're very differentiated from a lot of different competition, but I don't think that they're the number one chief competitor. And I think that that's really hurting them because, like Disney and Coca-Cola, Nike has a lot of growth concerns because they're pretty much everywhere that they could possibly be that would make sense. However, I think that other people have different preferences when it comes to shoes in the way that they don't have for drinks like Coca-Cola or movies that are made by Disney. I think that Nike has a relatively stronger brand power than a lot of these other companies, but I don't think it's quite as strong. So, for example, if there's a kids movie, you're way more likely to watch Disney or Pixar than give an indie film or a different studio as much of a chance, and you probably don't have any idea some of the other children's films that you've seen, who they've been created by. Whereas with Disney, you know which Disney movie or which movies are Disney movies. And with Coca-Cola, if you were offered an RC Cola, a Pepsi, and a Coca-Cola, you would probably go with the Coca-Cola. And the other advantage that Coca-Cola and Disney movies have is that they're not really seasonal. Nike does have winter apparel, but it's definitely not the leader in winter apparel or in boots or things of that nature. Nike is very much a seasonal apparel company. They don't have the same kind of brand dominance as Coca-Cola and Disney. It's just not something that you can really have in such a competitive industry. And there are plenty of other brands that are able to compete at a high level. Disney really only has Pixar that they're competing it with children's movies, and I feel like consumers will watch both products usually. And Coca-Cola is really only competing with Pepsi, and I think that Coca-Cola's sales are much stronger. They are also competing with Dr. Pepper or Dr. Pepper Keurig and other companies, but I really feel like Coca-Cola is the standalone winner in the minds of people, whereas Nike is probably the winner, but some people will probably only religiously buy Adidas or Puma or, Under Armour. There's a lot of different things that consumers have options for, and they're able to look different than just wearing Nike clothes. Whereas with Coca-Cola, I know a myriad of people that consume Diet Coke and Coca-Cola products in general. So with that being said, I want to say that I cannot really give a definitive answer on this stock for two reasons. For one is that I'm not a financial advisor, and this is not financial advice. It's for entertainment and education purposes only. And for two, I am not super knowledgeable of the fashion industry. I'm not really a super fashionable guy, nor do I pretend to be. I don't really feel like I have an edge in this industry, so I would not want to be investing my money in it. And I especially wouldn't want to be paying a premium for a company like this, even if the DCF says that it is undervalued in some way. Specifically because if I was going to buy a clothing or apparel company, I would want to buy a relatively more unknown or lower market cap one that looks very strong financially, that's continually making money, like maybe a boots company that has a market cap of 500 million and a very strong balance sheet. I feel like that personally would align with my own preferences more if I was going to make a foray into the fashion industry. However, Nike does have a very strong brand, and I think that it's worth paying a premium for. But I think that there are a lot of difficulties that I really can't answer. And for that reason, I wouldn't want to commit any kind of capital to this personally. But looking at the stock is down 28.08% over the past year. It has a market cap of $105.99 billion, a price to earnings ratio of 22.14, and an annual dividend yield of 2.23%. The 52-week low is 68.62, so the stock is trading near that at 71.66, and the 52-week high is a staggering $101.92. So Nike looks to be in a really good position if you are someone that's optimistic about the stock and thinks that they can improve their free cash flow into the future and improve their revenue into the future on a consistent basis. Overall, I think that it's not always good to buy into something that's falling because it could continue to fall. I think it's very possible that because Nike is kind of at the top of this industry's mountain, and it is unfortunately an industry that consumer preference changes very quickly, it could continue to fall because there is $105.99 billion worth of market cap that this stock is able to fall. And in the footwear and fashion industry, it's very difficult to maintain this top kind of spot. However, I do think that Nike has the advantage of having a lot of research and a lot of very talented people working on their clothing and footwear, but I'm undecided on whether or not they're going to be able to actually reliably increase their revenue over the long term. Now, looking at the actual analysis of Nike from analysts, they're pretty split between strong buy, and hold, with analyst price targets ranging anywhere from $49 from the low to $120 from the high, which is a crazy range when you really think about that, with an average analyst price target of 85.95. This totally makes sense that analysts would have very, very different opinions of the stock, strictly because they're very involved with actually what consumer sentiment is, what consumer taste is, and trying to understand what is going to be in. That's what these analysts are really, is their full-time job. They're trying to understand the fashion industry. They're trying to understand the sportswear industry, decide which of these companies are going to be winners and which of these companies are going to be losers. So some of them are obviously going to forecast that Nike's going to do better than it's going to do. Some of them will forecast that the sales will be worse than they're going to be into the future. And the earnings kind of allows them to change their models and change how they think about the company. So I think that we have a lot of different opinions here, and that totally makes sense because I think that it's very difficult to be invested in and to understand what the objective fair value is until you actually see the results. But then you're already looking forward to the future and pricing in what the future could be. Here we have the weighted average cost of capital for Nike. I calculated a weighted average cost of capital of 6.34% based off of the CAPM here that found a cost of equity of 7.054%, based off of the risk-free rate of 4.317%, the average 5-year beta of the stock of 1.02%, and an average market return of 7%. I was not able to actually find any kind of interest expense on the balance sheet. I actually saw that they had interest income. So I think it's very likely that they did not have any kind of interest expense, and it would make sense that they wouldn't have because it wasn't on the balance sheet. And the total debt weighting is very low compared to their actual market cap. So when we multiply both of these out by their weightings and their respective costs, 7.054% and 0%, we get a weighted average cost of capital of 6.34% that we will use for our discount rate. Now, moving on to the actual model itself, we can see that the average revenue growth is 2.54%. And I do want to say, and just preface this, I think that the trailing 12-month number is very likely to be weaker than the end of year 2025 number, simply because we haven't hit the quarters in the summer yet, which are usually probably the strongest times for Nike, if I had to guess, just because they probably sell more footwear during the sports seasons. They probably sell more activewear during the sports seasons. And I don't think Nike is really as dominant in the actual winter category. I don't see a lot of people with Nike coats compared to other types of coats. Sure, they sell them and they make a pretty decent profit on them, but they're not selling as much product when it's not the summertime or it's not a time when sports are being played, because they're really big in sportswear. Now, this model, even though it's forecasting off of the trailing 12-month number, shows that if Nike does not grow the free cash flow at all on average over the next 9 years, then there's 7.95% upside to the stock. And what I've really found very interesting is if we actually decrease by 1% on average per year of the free cash flow for the trailing 12-month number, which, like I said, is likely going to be smaller than the 2025 end of year number, we can see that Nike is only 1 cent above its fair value. So if you believe that Nike is going to grow at a rate of higher than negative 1% over the next 9 years, then it's very likely that Nike is undervalued. Now, if we change this to the average free cash flow growth rate of 13.72%, we can see that Nike should be worth double what it's trading at now. There's 200% upside there. Now, I think that this is misleading because I don't really see a lot of avenues of growth of the free cash flow for Nike simply because they're pretty much in every place that they could be. I think that it's very likely that they will lose market share in the future unless they're able to expand into other categories and figure out how to rebrand themselves in that way without hurting their already enormous sneaker empire and sportswear empire. But I think it's a very difficult type of company to run. And I think that it is probably oversold, although I can't really give a definitive answer on that because I don't really understand the fashion industry at a high enough level, and I would not want to put my own money there. Now, if you think that they're able to grow, and I do think it's possible that they could continue to grow the free cash flow or increase shareholder equity by making wise financial decisions, which I think that they've been doing and very efficient in doing that. Some examples of this would include them buying back shares, them increasing the dividend, which I think is very possible, and just being very smart about how they're using their capital to increase that free cash flow, and making every strategic move they can to increase their profits as much as possible, because I don't know if it's really going to be very likely that the revenue is going to change that much. We can see that the average revenue growth is only 2.54%, but the average free cash flow growth is 13.72%. So the actual sales are very similar year to year and not really growing at a tremendous amount. But because of the smart ways that they're optimizing their capital structures and increasing their profits and lowering their expenses, they have been able to increase that average free cash flow growth rate. But this is definitely concerning if you're an investor and if you are Nike, because they're not actually increasing the thing that matters most, which is their sales. And they could be losing market share very rapidly because it's a very competitive space. They do have somewhat of a monopoly, but so do a lot of the other companies that are trying to make a name for themselves. And they're competing in a lot of different areas. So one thing that I really don't like, but I think is a necessary evil with large, giant conglomerates like Nike, and I can kind of relate this to Microsoft, is that Microsoft does a lot of things, and they're involved in a lot of things because they are such a massive company and they need to find growth. However, when you're focused on a lot of different things, it becomes very difficult to have the right talent working on the right projects. And we can see that with Microsoft's disastrous drop of their Zune. They really didn't capitalize and get into the smartphone business in a big way that they definitely could have. And I think that this could be very similar of Nike. I think that there are probably categories that they could be very successful in, but they're not going to be as successful in their existing categories or some of their other categories because they don't have enough of the right, well, they have the correct talent, but they're not zoned in on one thing necessarily, and they can't be. I mean, it's a huge disadvantage when you get this big because you're constantly trying to grow your revenue and grow the areas that you're successful in. And I think that it's impossible to ask that of Nike to be successful in every thing that they enter into. And I think that they're going to have a lot of misses, but I really would love to see Nike trying to get into different spaces and innovating and working on new projects that are bigger and better and able to really grow the company in different ways. And for that reason, I think that it's a very difficult and nuanced question on whether or not you should buy Nike because the financials look very strong. But I think that it's the type of company where you need to understand the industry at a very high level And I just personally do not have those skills, so I'm not willing to make that risk, especially with a company that is in the fashion industry, which has a lot of changing consumer preferences. And I think that this is something that you have to make the decision on if you think that the sales are going to improve, if they're going to go down, and if you want mainly as your goal to have a good dividend yield as a percentage. I think that this could be strong. I think that it's very likely that Nike has a lot of advantages being as big as it is, and it can consistently pay that dividend. We haven't seen that debt be too crazy compared to their market cap overall and their revenues overall. So I don't think they have a lot of debt. I think that the dividend's very stable. But I just don't know how they're going to continue to grow when they're already at the top. And it just feels like they're fighting in a lot of different fronts right now and in a lot of different categories. And I think it's very difficult to make up for that in the short term. I think that Nike's going to have some really long-term plans to build their brand up in different segments strategically. And I think that if you believe they're able to do that, then you should pull the trigger and buy this stock. But if you don't think that they're going to be able to execute this plan and be able to grow their revenue at a higher rate than they currently are, then I don't think that you should put money into this stock, especially if you really are honest with yourself and you just say, I really don't understand the fashion industry and what consumer preference as a whole is going to be. So that's my opinion on Nike stock. Let me know what you guys think in the comments down below. Please hit that subscribe button. We're already at 206. It's been awesome. I just think I passed 90 days on the channel not too long ago on making YouTube videos, and I really appreciate all the support. Thank you.